Tracy Reinick, Zacks stock strategist, and today I'm taking a deeper dive into two of the most important stocks on Wall Street, Apple and Amazon, two of the A names in the FANG. They're both reporting this week. Both have very interesting charts. What are the analysts saying about this earnings season? Are they raising earnings estimates heading into this number? Let's dive right in and see. Let's start with Apple. Of course, it's ticker AAPL, and this is its earnings surprise chart. And as you can see, there's all these green arrows. That means they haven't missed in 5 years. And some of these are really big arrows, the last 2 quarters. This is a 30% beat. The one before that is a 40% beat. So they're starting to put together a nice string here, and the shares have responded, as you can see. They're up over the last year, up 29%, 5-year returns, 358%, and that's versus the S&P 500, which hasn't been too shabby, up 112%. So Apple's still making those highs, even though it is massive and a mega cap now. But what do those earnings look like? Let's see what the analysts are thinking for this quarter and for the year. So I go over to the detailed estimates page and I'm scrolling down, and this is interesting. So one of the analysts, and we have 10 estimates on the company. One of them has been revised higher in the last 7 days. So that's bullish. We do have 2 down in the last 60 days, but that's old information now. I'm not concerned about what they were doing 2 months ago. I'm concerned with the immediate raises because analysts are really reluctant to raise heading into the earnings report. Like, wouldn't you be? I don't want to get it wrong. So I'm just going to kind of stay course unless someone pre-announces. Then, of course, I can change. That's easy. But if the company's not saying anything, I'm basically just holding pat with what I think is going to happen. But here, one bold analyst is going out there and saying, hey, I think it's going to be better than everybody's anticipating. They beat every year for 5 years, or every quarter for 5 years. So I'm thinking that's going to happen again. I better get a little more bullish. So this is bullish. They also raised here for the year and for next year. So that's all looking good. What does it look like for the earnings? I'm scrolling up a little bit here. So last year they made $328 for the year. This year, expect to make $559. That's 70% gain. Of course, we're seeing the rebound with the better global economy. You are going to see a rebound with almost every company off of the pandemic year. Here's what they're looking for, $1.23 here for the Zacks consensus for the quarter. And what does that look like over here? So they were at 115, and now it's gotten a little more bullish up to the 123. Next year, however, off that 559, you can see analysts have no clue. They're at 573, so a little bit of gain, but it's just 2%, as you can see. But this, I'm noticing, is common among these big mega caps. It's just been a tremendous 2-year time period for earnings growth and revenue growth, and nobody knows or has any idea what might be happening next year. So that's why this quarter is so important, because we're hoping the companies are going to tell us kind of what they're seeing out there with sales and what the demand is like. So Apple trading at 26 times. It's not that expensive. It's down a little bit off of its 30-year high because those earnings estimates are rising, or I should say it was trading at 30 times prior to this rebound in those earnings. And I do like to look at the price and consensus chart as well. So let's pull that up, and you can see the nice earnings growth here, and then it does narrow, but we are seeing this narrowing on just about every one of these mega caps. So let's take a look at Amazon. Are we seeing it with them as well? But we're going to start off with the earnings chart for Amazon over here, and they put together a nice string here. They have all these big beats because what were we doing during the pandemic? We were all ordering online, so their business took off, and the analysts couldn't keep up. But you can see the shares have basically just stayed in this, trending area. They haven't really gone anywhere. 1 year, they're up 31%, but year to date, not up very much at all. And so everybody's just kind of waiting to see what will happen on the next leg of the global recovery. Can these numbers continue? And until that happens, I guess the shares are just kind of continue to tread water. But what do those detailed estimates happen? Is someone raising like they were with Apple? Let's scroll down. No, nobody's saying anything. Nobody knows what might be happening at Amazon right now. So over here for next quarter, someone has lowered for the holiday quarter. So that's a little bearish given what Amazon's business is. So I'm not really liking that, but not for this quarter. And we're seeing 872 is what everybody's looking for. That is down off of the last 90 days, but people were a little too bullish a couple months ago. That doesn't bother me because nobody's been doing anything since that number has come way down. And then pretty much the same for the year. It's kind of holding pat here. And then next year is looking better. So this is a little different than what we're seeing with some of the other mega caps. We're still seeing earnings growth expected of 29% into 2022. That's very bullish here. And another big revenue growth. This year is the rebound year, 23%. But look at next year. Another 18%, and hard to believe, 563 billion in revenue. Remember when 100 billion was like dramatic when ExxonMobil did it like 15 years ago. But now look at it. That is an incredible number here, 563 billion. What is this looking like on the price and consensus? It's going to look better. This is going to be a better looking one, and it certainly is. We don't see the narrowing up here. We still see the growth. So that's what's interesting about the chart here, that it is staying in this treading water kind of range with this big earnings growth expected, and nobody is lowering. So someone's going to get it wrong. Either the analysts are simply too cautious here and they should be raising, or they're expecting this to be cut and maybe 2022 to be lower ultimately as we head into 2022. We don't know, but this is what this earnings season is all about. And we're going to find out on this earnings call. So you're going to want to tune into both of these, Apple and Amazon, the two FANG A's. These are key charts. So a lot of questions about the US and the global economy may be answered in just these two earnings reports. That's why we're all watching Apple and Amazon. I own Amazon in my own personal portfolio. I'm a Google Alphabet kind of girl, so I never have bought Apple and I don't use its products. So that's why I own Alphabet instead of Apple. But I know most of you own one or both of these and most of the FANGs. So we're going to keep an eye on all of them this week. You can get all of our Earnings All-Stars videos at Zacks.com/YouTube. Also, check out all of our features and all of our newsletters and everything else going on Zacks.com. We're bringing stocks to you every week on Zacks.com. You can go over there at Zacks.com/promo, see what's on sale this week. And I'll be seeing you again all throughout earnings season. So be sure to follow along because there's plenty of more earnings charts still to come. And I'll see you again next time with more of those charts.